What's up, YouTubers? This is another video on why gold is going down, why the demand for gold is down, and what may make it go up in the future. In a previous video, I had mentioned part of the reason we're seeing a downturn in gold or a trending down in gold or a bear market in gold is because interest rates are going up. So in my previous video, I said interest rates, the 10-year interest rate is at about 1.3%, and in 2020 we saw interest rates at a low end of about 0.5% or 0.4%, so under 0.5% around there. So between now and then we've seen interest rates go up to about 1.3%. So that causes a decrease in the demand for gold or demand for gold as a safe haven. Generally speaking, when people panic, they buy dollars and gold and bonds, treasury securities, or short-term treasury securities or long-term bonds. But I think because the economy is reflating, we don't see a demand for gold as a safe haven asset, and we're seeing less of a demand for gold or for interest, long-term bonds as a safe haven. So interest rates are going up. So there's more of a demand for shares, tech shares, and Bitcoin, etc., even commodities, because we're seeing the economy reflate. Well, here we have an article on the demand for gold. I bring it up because India is one of the biggest drivers of the gold market, at least physical gold. They're one of the biggest buyers of gold. Not China or Russia, but India. Anyways, as we can see from the article, right here the headline says India's gold demand drops 35% in 2020. That's a lot. As we can see, total gold jewelry demand in India for 2020 was down 42% at 315 tons compared to 544 tons in 2019. And then if we go lower, we can see partly why that might be. The coronavirus pandemic and high prices caused gold demand to fall by 35% to 446 tons in 2020 compared to 690 tons in 2019. This is in value terms. That's why these numbers are different. In the value terms, the demand fell by 14%. Part of the reason that is because the currency of India has been devaluing. That's part of that reason. Then we get down to the gold jewelry demand, which I just stated above. Then we have total investment demand for 2020 was down 11%. So investors are actually buying less gold. And here we go. The gold demand will drop was only 14% when viewed in value terms, as prices were up 34% in the local currency, which is the Indian currency. So in their currency, it's 50,000 units for a 10-gram coin or bar or whatever it is they have over there. Anyways, I'll leave a link in the description to this article if you want to go and read it. But this is yet another reason why demand for gold is down, and we may see demand for gold go up in the fall. That's my opinion. I think shares could start correcting at that time or before then. There could be another panic, and we'll probably see the dollar and gold go up at the same time. We'll see interest rates plunge again. I don't know if it'll be as bad as what we saw during coronavirus, but it could be. And then as that happens, we'll probably see the Fed and the EU intervene in the marketplace and drive interest rates back down and negative rates, and even more probably in the United States. In parts of the EU, they're already negative. So when that happens, 6 months or a year from now, then we could see we'll see gold shoot up probably to $3,500 an ounce or higher. Anyways, that's all I want to share with you about gold and why it's going down right now. So like, share, leave a comment. Thank you.